Greetings, my fellow financial ninjas. So, continuing on with our discussion last week, some of my friends commented that these Fed members, are they really that dumb? And the obvious answer is no. They're pretty smart people, did their PhDs and all the work experience that they have. I mean, there's a reason why they are in the Federal Reserve. But one of the things that is an issue with these positions is that these are actually influenced by the politicians. Now, if you remember back in 2018, when Jerome Powell was all set to raise the rates, Trump was the president at the time, and he threw in, typical Trump style, a very public tantrum, saying how wrong they were and so on and so forth. But in this case, I think Jerome Powell probably knew that there was the only path was inflation, and even if he wanted to raise the rates, he must have gotten a lot of resistance from the administration. Now, it was probably not as open as it was during the Trump's time, but I'm pretty sure that there was a lot of covert resistance from the inside, and so they ended up waiting for too long. And now, because the midterms are coming up shortly, and Democrats want to be in power, they want the inflation squashed because that is one of the biggest problems right now. In fact, it is the biggest problem. I mean, people hate inflation. Everybody's talking about it. I hear people talk about the prices at the grocery store, the gas prices, and all that stuff. So right now, the target is inflation, and the only way they can the tool that the Fed has to reduce the rate of inflation is raising the rates and doing the quantitative tightening. So because they want these results to be seen as soon as possible, they have to be aggressive, and there's no other option, so to speak. So I think that is one of the reasons why, even though they might know what's going on, but what they can actually do to influence these sort of things are actually governed by the administration. A lot of people ask me, like, why is this such a big deal? Why is it like a systemic risk? I mean, the employment is all right. People are still employed, and why is this such a big deal? One of the reasons is the pace at which it has been going on, and also the quantitative tightening that the Fed has undertaken, and all at the same time at such a speed will have its repercussions, and those are seen not just in U.S. but worldwide. For example, what happened in UK last week. Bank of England was forced to bail out, so to speak, one of the pension funds. Now, it is very common among pension funds to go after returns because they have certain obligations to their employees. And it is very common for these pension funds to invest, for example, in bonds. These are a lot of them are very short-term investments, and because the rate changed so fast, the value of their bonds went down, and so there were margin calls. So margin calls is something where you have borrowed money from the broker, and the broker and the value of your investment has fallen down. So the broker comes in and says, "Hey, pay me my money." And as you can imagine, when it's like a pension fund, the amount of margin calls are huge. So what ended up happening was these guys had to sell their bonds in order to make these payments. And because they were selling the bonds, the prices fell even more, and that kind of caused a loop where there were more and more margin calls, and they were forced to liquidate their bonds, and the prices kept falling. So then Bank of England had no other options, because otherwise these pension funds would go under, and there would be a lot of dominoes that would fall, and it would affect the whole banking system. So the banking system, the worldwide, the way the financial system has been created is very fragile and is very interdependent. And so there was no other option for the Bank of England but to bail out these banks. And one of the things that's going on is when the new administration that came in, well, it's not the new administration really, it's just the new prime minister that came in. She believes in the Keynesian philosophy where giving away a lot of money actually helps, especially via taxes. So she reduced the corporate taxes, and one of the side effects of that is that it works in contradiction of what the government is trying to do, which is to tame in inflation. But then on one side they're flooding the money, and on the other side, there's quantitative tightening going on, and the rates are being raised, and so all of these are really opposing forces, and that's why you see the problems that there are. Now, one of the things that I don't actually agree to is the issue with Credit Suisse or Credit Suisse. The issue with them I don't think it's like a Lehman Brother movement that we saw in 2008. This is just a badly managed bank, but we cannot rule out a Lehman type of crisis because these things happen very fast. I mean, in 1 week things might be all right, and within a few days things just deteriorate to a point where it becomes a systemic crisis. Now, all of this is fine, but as an individual investor, what is it that you should be doing? And what I'm personally doing is, right now, I think we are definitely in a bear market. Bear market is basically 20% or more drop in your indexes. Nasdaq has been in a bear market for a while now. I mean, they're almost 30% down from the peak. S&P is down 20, and Dow is about the same. So in my opinion, 20% discount is a pretty good discount, and I'm buying stocks. So as you already know, I don't buy individual stocks. Most of my investments are in ETFs or index funds. VO being my favorite. There are some others, large caps, small caps, all which I've discussed in other videos. But the bottom line is most of my investment is in index funds. And so if I'm getting them for a discount, then I'm going to buy them. Now, we might not be right at the bottom, but I think that we are pretty close to one. There might be another downturn, maybe towards S&P 3,500. It's at 3,800, about 3,800 right now, so it might go to 3,500 or even as low as 3,200. But who knows? I mean, even if you ask this question to Warren Buffett, he's going to say, you know what, I don't know. And so for me as an investor, I'm going to put in some money right now. If it goes to 3,500, then I'm going to put some more. If it goes to 3,200, then I'm going to put some more. And that's how I'm going to play this. And also, I have regular investments through the 401k. Since I'm self-employed, I have a SEP IRA. And in the SEP IRA, I keep buying stocks as they keep going down. So yeah, that's my strategy. Now, some of the speculative stocks that I have purchased, for example, all the ARK stocks, the Cathie Wood stocks, so to speak, those are down more than 50%. And you know what? It is what it is. I have to take the loss. I didn't sell. I don't believe in selling. I do believe in some of these companies that are in the ARK funds. And I think they are, some of these companies are going to do exceedingly well. So I'm going to stick with my stocks that I've picked. But I do not have a very large position in them. So I'm really not worried about it. It's less than 2% of my portfolio. So, so what if it drops 50%? I'm not bothered by it. Most of my positions are in index funds. And those are roughly 20% down from the peak. I mean, that is something that I can live with. I've seen quite a few ups and downs. I've seen two big recessions, 2001, 2010. And so I'm very comfortable that eventually these will come back. What about the real estate market? As a realtor and somebody who's been in the market for a very long time and owns multiple properties, I think I know a little bit about real estate. And so the last property that I purchased for investment was in 2020, late 2020. And since then, I just have been waiting because of what was going on. I just sort of stayed away from the market. But now I feel a lot more comfortable buying. And does it mean that I'm going to buy any property that's listed? Obviously not. I run my numbers. You have to do your work and run the math and everything, and make sure that you get the property at a sufficiently low discount. So what I'm doing, and my strategy is that I'm lowballing all the homes. And so if there are sellers that have been trying to get their dream price from March 2022, obviously are not going to get it. And if they're sitting on the market for 50, 60, 70 days, I am making offers that are 30% lower, 25, 30% lower. Now, most of my offers do get rejected, but I'm pretty sure I will find that one seller that is more realistic on what's going on in the market and be willing to negotiate. And I'm hoping in the next 3 to 4 months I should be able to close on a property. Now, the interest rate on these properties is going to be a lot higher than I have for most of my other properties, but that is okay because I'm able to lock in the low prices right now. And if I have to pay for the next couple of years towards the interest, I'm fine with it. I'm pretty sure in 2025 the rates are going to be a lot lower than they are right now. The same applies to crypto. I'm actually negative on all my crypto holdings, but I continue to add small positions to my existing crypto positions, and I'm hoping that over the long term I would come out ahead. Now, one thing that I would like to point out here is that, again, crypto is a very, very tiny part of my portfolio. It's about 1%. So, you know what? Even if that 1% goes to zero, I'm okay. It's not going to affect me. So that is one of the things that you should be able to manage and identify is how much risk you are willing to take, and that's one of the things that most people are unable to work with. They all have to look at their risk appetite and based on that make the decision what's best for themselves. In my case, most of my investments are in index funds, and there is a very small portion of my portfolio that goes towards speculative investments, and majority of my portfolio is invested in real estate, and I'm getting income from those real estate. So I really don't care about the price of the properties that I purchased. I mean, some of these homes that I purchased back in 2016, for example, I had bought a house, for example, in Rockland that was 470 something. It went all the way up to 750. And I think right now the price is around 650. But hey, I don't really care. It's a long-term rental, and I'm getting I have a good tenant, and the tenant has been there for the past 3 years, and I'm getting regular monthly income. I really don't care if it drops by another 10%, 20%, whatever. As long as I'm getting paid with my rent and I'm able to make my payments on the mortgage, we're good. So yeah, that's my strategy. Let me know what you think about the video. Like, subscribe to my channel, and I will see you in the next video. Bye.